Group Statements, Chapter 4, Example 4.1. This is a comprehensive example that brings all the concepts of Chapter 1 to 4 together. What I want you to gain from working through this example is the following. First of all, you are given the separate trial balances of the parent and the subsidiary. You need to be able to understand the line items as it's given to you. Then we will follow the entire consolidation process in this example, and I need you to understand that process. We will be writing all the consolidation journal entries, and I need you to identify the usefulness of the analysis of equity. Then, the end product of this consolidation process is the consolidated financial statements. I need you to focus on being able to prepare each individual statement on its own, without first having to do one of the others. What I mean by that is, it's important that you can do the consolidated statement of financial position and specifically the equity section without first having to do the entire consolidated statement of changes in equity. Or you need to be able to do only the consolidated statement of changes in equity and then calculate the profit for the year items without first having to do the entire consolidated statement of profit and loss and other comprehensive income. And then, to me, the most important of all is this last one. You need to now use this example to see how your consolidation journal entries change the line items in the consolidated financial statements, giving effect to the principle we've been talking to throughout the videos thus far, where line by line we start with 100% of the parent's amount plus 100% of the subsidiary's amount, and then adjusting those combined balances and totals with the effect of the consolidation journal entries. This is example 4.1 from Introduction to Consolidations, Chapter 4. B Limited acquired a 70% interest in the ordinary shares of S Limited on 1 January 20X9. This represents my acquisition date. The trial balances of each of the companies on 31 December 20X10 were as follows. Whenever you work with an example or a question, you need to identify your acquisition date and you need to identify the current reporting date. Then you need to orientate yourself to know how many periods have passed since acquisition date. And in this example, there's 2 years since acquisition date. You need that information for purposes of your analysis of equity or a timeline, whatever you decide to use. That means your since to opening balance represents 1 period, and then you have your current reporting period since acquisition date. The trial balances of each of the companies now represent your starting point, the separate financial statements of the parent and the subsidiary. It's not given to you in financial statement format. It's still the trial balances, but it represents the separate financial statement amounts of the parent and the subsidiary. It's important to understand that these trial balance amounts should be the final amounts before you can start the consolidation process. That means that all transactions should be fully recorded and recognized in the separate financial statements before you consolidate. Right, so under the assets, we start with the line item property, plant and equipment for both entities. The line item investment property will be unfamiliar at this point in time because it's the topic of your IS 40, which we will look at later this year. Just treat it as an asset of the subsidiary at this point for purposes of your consolidated SFP. Then important items we always have to identify when we consolidate is the investment by the parent in the subsidiary, and it's lying in the trial balance of the parent at 118,600 Rand. Here we see a loan to S Limited for 50,000 Rand. Now, coming from Chapter 4, we expect this to be an intra-group transaction, so somewhere in the subsidiary's trial balance, we need the liability corresponding with this asset in the parent's trial balance. We have a favorable bank balance in the parent, no bank balance in the subsidiary, so that could potentially indicate that there is an unfavorable bank balance in the subsidiary. Then I just have a line item for all my other current assets. Under equity and liabilities, again, we need this share capital and retained earnings as important balances for preparing the consolidated financial statements. We see the share capital of the subsidiary at 142,500 Rand. And then retained earnings is specifically indicated on this trial balance with the date 1 January 2010. So that retained earnings line item represents the opening retained earnings. It's opening retained earnings because I've indicated it to be, but I do not have to indicate that date in a trial balance. You need to be able to understand the items in your trial balance so that you can conclude that is an opening or a closing balance. So by looking at the rest of the line items in your equity section, how would you know that that is the opening retained earnings without me giving you the date? The reason it's an opening retained earnings is because your profit or loss items, profit for the year and all the profit and loss items are still included in your trial balance. So that means they have not closed off to retained earnings yet. So my retained earnings in this trial balance is still the opening balance. You need that. You need to know what your opening retained earnings is. We use that in the analysis of equity or in the timeline when we start analyzing the equity of the subsidiary. And you also need that for purposes of your statement of changes in equity, because there you work from an opening retained earnings with movements for the year. Then revenue and cost of sales for P&S is given. And here you see some dividend income in the parent. Now the parent is an equity participant in the subsidiary. It's got an investment in the subsidiary. So this dividend, we expect that to be the dividend income from the subsidiary. But remember, we can never assume that. You always need additional information to confirm that information. Moving on to some of the expense items you see in your trial balances. There's a rental expense and a rental income, and by the looks of it, it could be intragroup because it's for the same amount, but it is something we need confirmation of. We can't just assume it's intragroup purely because it's the same amount, and the same goes for the finance cost and finance income. You need more information. Then we have administrative fees received of 12,000 lying separately in the parent's trial balance, and then we have the administrative expenses of the parent and subsidiary. The depreciation is just listed as a separate line item, the 30,000 and 15,000 Rand, and then here linking to my IAS 40, I have again my investment properties fair value adjustment. As I've mentioned, we will look at IAS 40 later on this year. For now, just treat that fair value adjustment on the investment property as an income. You can see it's an income in this trial balance. and there you have your income tax expense. Now, important to always identify, especially after we've looked at chapter 4, is the dividends declared. We said dividends declared by the subsidiary will be intragroup, and in this instance, we do have ordinary dividends declared and paid by the subsidiary, and there were two ordinary dividends declared and paid during the reporting period, one for 15,000 Rand and one for 10,000 Rand. Why is it important to know whether the dividend was declared and paid or whether it was only declared? Remember, the consolidation journal entries will be affected when the ordinary dividend by the subsidiary was only declared and not yet paid. But the moment you have the dividend declared, there's already the intragroup transaction recorded by both companies. And we've earlier said there was that intragroup loan we're expecting. And here you now see the other leg of that entry, the loan from the parent for 50,000 Rand. And you have a bank overdraft. Now, if you remember, just look back at your assets section, you'll have a favorable bank balance of the parent and an unfavorable bank balance here with the subsidiary. So we need to keep an eye out for those specific criteria that we've mentioned in chapter 4 before we can make a decision on the presentation thereof in the consolidated financial statements. So whenever you look at an example or a question, it is important that you spend some time on the trial balances just to get an understanding of the transactions happening in both before you look at the additional information.